Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 17th of November 2020, and we're looking at a critical article, really, recently published, stating that we should not always believe the figures as promoted by the Silver Institute. So let's take a look. Now, yesterday we published a video entitled, "How much will silver be worth if the dollar collapses?" And on Sunday we produced episode 1 of Are We Reaching Peak Silver? And we provide links to both of these in the description box below, as well as the links to our 5 episodes of our Peak Gold series. Now, long-term listeners to our channel will be aware that we frequently quote the Silver Institute, particularly when it comes to silver demand and supply, and always comment on their quarterly and annual reports. Now, we do this because generally we believe it is to be one of the best guides out there to gain as accurate a picture as possible in terms of silver demand and supply, even though we have frequently stated that the figures must not be regarded as absolutely definitive. We have also frequently pointed out that these figures do not necessarily dictate the price of silver, as there are numerous other factors which can and do influence its price, particularly short to medium term. Yes, demand and supply will ultimately rule, but silver is a metal that has both an industrial component and a monetary component. And it's truly important not to forget this when we're attempting to make future purchases or sales or considering silver as an investment. And particularly with the leverage created through purchasing paper silver, this too has, as we've recently discovered, a significant impact on price well beyond what is actually available in its physical form. Now, a little while ago we came across an interesting article which is perhaps a little more critical of the Silver Institute's figures than we have been, and our subscribers know that we often welcome differing points of view as long as they're backed up in a cogent and respectful manner. So today we thought we would look at this article published by Seeking Alpha, which provides an additional perspective to this whole realm of silver supply, demand, and price. So let's go over to the article. Seeking Alpha article dated 13th of September 2020. Warning: misleading silver supply and demand data. By Jan Nieuwenhuis. I've probably pronounced that incorrectly, and my apologies to Jan. Deep Value Research Analyst, newsletter provider. The Gold Observer. Summary: investment decisions based on the Silver Institute's supply and demand data can turn out badly. The Silver Institute has repeatedly changed its methodology in the past decades. I'm just skeptical of any conclusion derived from a silver market balance, surplus, or deficit. To me, it makes more sense to focus on variables that also drive the price of gold, such as inflation, risk, and interest rates, to get a feel for silver sentiment. Every year, the Silver Institute publishes silver supply and demand numbers that suggest the market is in a deficit or surplus, although there is no correlation between their market balance and the price of silver. Investment decisions based on the Silver Institute's supply and demand data can turn out badly. In a previous article, we've discussed that gold trades more like a currency than a commodity. An approach of a gold market balance, which produces a surplus or deficit, is therefore not appropriate nor indicative of price direction. Because silver is both a monetary metal and an industrial commodity, its supply and demand dynamics require special attention. My conclusion is that silver, just like gold, trades more like a currency than a commodity. Silver is a currency. In ancient Sumer, roughly 5,000 years ago, silver was a unit of account, a medium of exchange for large purchases, and a store of value. Silver has been used as money in countless civilizations ever since. Because silver is durable and valuable, very little gets lost. More than 90% of all silver ever mined is still above ground. Since the 19th century, silver is also being used for industrial applications. Currently, CPM Group estimates that half of all above-ground silver is in industrial products, and the other half is in coins, jewellery, silverware, and investment bars. The total above-ground amount of silver is about 1.6 million metric tons. Exhibit 1. For perishable commodities, a market balance, calculated by subtracting demand from supply, is indicative of price direction. This is because annual production is far larger than above-ground stocks. When wheat demand rises, wheat supply cannot be quickly expanded, as there are no vast stocks that can enter the market, and the price has to go up. The wheat market balance tells us if there is a surplus or deficit in the market that will either decrease or increase the price of wheat. Below is a chart that shows the wheat market's net balance, supply minus demand. The y-axis is inverted for more clarity. Whenever a surplus or deficit matches price direction, the chart bar is coloured green. If it doesn't, the chart bar is red. You can see that most chart bars are green, and nearly all red bars signal at a price turning point. Exhibit 2. Supply consists of production and import. Demand consists of consumption and export. For monetary metals, however, this approach is not suitable. The reason is the stock-to-flow ratio, which is calculated by dividing above-ground stocks by annual production. Silver's stock-to-flow ratio is approximately 30. Annual silver mine production is 26,000 tons, and 800,000 tons of silver are in jewellery, coins and bars, which comprises the stock. At the right price, this can enter the market as supply. Just a caveat here, notice his point, at the right price, this can enter the market as supply. To continue, for the sake of simplicity, I choose not to count above ground silver that is in industrial products as stock. Now clearly the reason for that is, of course, we're not absolutely sure what level of that would be retrieved or at what cost. Below is a chart that shows the silver market's net balance as disclosed by the Silver Institute's most recent World Silver Surveys. You can see that for the past 16 years, the market was permanently in deficit, while the price went violently up and down. This reveals that the net balance disclosed is misleading. Exhibit 3. Yet in the Silver Institute's World Survey 2018, it reads, quote, "In the silver market, as for any commodity, physical imbalances both explain and influence price action," unquote. In my view, for monetary metals, there cannot be physical imbalances because at the right price, there is always enough metal. For perishable commodities, the forces of supply and demand put a strain on available stocks, which moves the price. But when stocks greatly exceed annual production, in the case of silver, it is mainly traded in stocks that sets the price. Silver trade is not limited to what the Silver Institute measures as supply, mainly mine output, and demand, mainly newly fabricated products. Worth mentioning is that the Silver Institute doesn't disclose the actual amount of above-ground silver, which is 1.6 million tonnes, according to both the United States Geological Survey and CPM Group. Instead, the Institute publishes identifiable bullion inventories that account for roughly 60,000 tonnes. No wonder most people are confused about silver's STF. And as you can see here, and he highlights it, that the net balance is predominantly permanently in negative, regardless of the silver price. Exhibit 4. The Silver Institute's market balance 2009 to 2018 in million ounces, published in 2019. Massaging the numbers. The Silver Institute has repeatedly changed its methodology in the past decades. Before 2013, there wasn't a net balance disclosed in the World Silver Surveys. In those years, the difference between supply and demand was referred to as an implied net investment or implied net disinvestment, which you can see disinvestment and investment. Exhibit 5. The Silver Institute's market balance 2003 to 2012 in million ounces, published in 2013. Okay. A market surplus was referred to as an implied net investment, and vice versa. To me, this is odd, because when supply exceeded demand, the residual surplus, that's implied net investment, was supposedly a reason for the price to rise. In 2007, the Institute wrote, "The higher trading range, price went up, has to a large extent been supported by continued investors' interest in the metal, as our relatively modest net implied investment numbers for 2006 indicates. Sentiment has tended to remain overwhelmingly positive." This methodology was not accurate, as evidenced by the fact that from 1985 through 2012, implied net disinvestment was positively correlated to the direction of the silver price only 54% of the time. In 2013, the Silver Institute changed its methodology. Not only was the net balance approach adopted, but the numbers were also changed. Previous years of implied net investment, surplus, were flipped into negative net balance years, deficit. This can be seen by comparing the data for 2009, 10, 11 and 12 in Exhibits 4 and 5. Conclusion. The above shows the difficulty for consultancy firms of presenting a market balance for what is chiefly a currency or monetary metal. My message is not that the Silver Institute's reports are useless. They contain all sorts of valuable data. I'm just skeptical of any conclusion derived from a silver market balance surplus or deficit. To me, it makes more sense to focus on variables that also drive the price of gold, such as inflation, risk, and interest rates, to get a feel for silver sentiment. Note the correlation between gold and silver in the below. And if we take a look at this, you can see quite clearly that, broadly speaking, with a slight time delay, the trend is similar. But of course, silver outperforms on peaks and it underperforms on troughs, as we can see here. And at the moment, the disparity is quite significant. That's the end of this article. Interesting, don't you think? Please do comment and let us know below. Meanwhile, as we publish this at 1835 GMT, we can see that gold is down just over $2 today at $1,886, and silver is down around 15 cents at $24.60. So not really much great movement so far this week. Bitcoin, however, is up $800 in the last day at $16,730, and that's over $5,300 up in the past month. Meanwhile, thank you so much for listening. Please share your comments below, and if you haven't already done so, subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.